Hey, what's up everybody? It's Tuesday, August 2nd. So what the heck happened? What happened? Yesterday I said that today we'd have a nice rally, a big rally I think I said, and actually that didn't happen. The opposite happened. We went down. So the only explanation I could come up with, and I could be completely wrong, but to me, just kind of looking around and seeing what happened today, for me it was all about headline fears, headline trading. And by that I mean we had two things happen today. First of all, we started off with the Nancy Pelosi arriving in Taiwan, and there was a big build up to this, and there was a lot of angst and commotion, and the Chinese were saber rattling, and I think that through kind of a pull over the market, there was a buildup of worry and concern, and we came in already on the weak side. But then things started to get better. As a matter of fact, I sent out an email to my subscribers early when we were down saying buy the dip, and then the market reversed. And then we had some comments by Fed officials saying basically that there is no pivot. I made a video about this yesterday. I said, everybody was talking about pivot, that the Fed has made a pivot. And I said, I don't see any evidence of a pivot. I don't see any evidence of a pivot in their rhetoric, in their comments. I don't see any evidence of a pivot in Fed fund futures and what they're pricing in as policy based on the upcoming meetings. I said that yesterday. I mean, I was laughing at this notion that there was a pivot, but I said I understand it because everybody out there has to rationalize what's happening in the stock market or the economy through the lens of monetary policy, because that's the only thing they pay attention to. So today that whole pivot thing was squashed by Fed officials, and that sent the market down. And I still thought after that initial break that we would recover. And actually, NASDAQ wasn't down that much, and nor was the S&P. It was really in the Dow. And I'm a little bit, I'm a little bit surprised. So here's the thing. We had a very big positive fiscal flow yesterday. It was a 98 billion flow with a net of, I think it was like 53, 54 billion. Very, very big. Now that puts us right now 43 billion above the April tax drain. So we got back all of that 324 billion plus an additional 43 billion. So I think by now I can stop talking about the April tax drain, because that's history. And August, I continue to say, and I will repeat and tell you that August is going to be a big month fiscal, and it's going to be a big month for the stock market, notwithstanding what happened today and yesterday. Okay, we had 2 down days. And again, I'm surprised on the one hand because of the big fiscal injection that we had yesterday, but on the other hand, I understand the behavior based on headline trading. With the Fed comments and then the whole Taiwan thing. And I think later on in the day, actually, if I recall now, I think late in the day, there was some more saber rattling by China. They're going to conduct live fire exercises or something. Look, China, I'm sorry, you just got dismantled by an 82-year-old grandmother. You talk tough. Don't come over here. There's going to be big problems. We're going to shoot your plane down, whatever. She went over there, no problem. And China just went away with its tail between their legs. We're going to go out in the ocean and shoot off some of our rockets. Okay, fine. So, but that happened late in the day. And I think that reignited that sell-off, because actually, in the last half hour, I mean, NASDAQ was basically unchanged. It was almost up. And it just, like I said, it settled down marginally. The S&P settled down marginally. The outlook for August remains the same. I'm not changing my outlook. The fiscal is going to be positive. Folks, look, this is what it's all about. I mean, this is what it comes down to. As these flows accumulate into the economy, you know, they are put to work. They're deployed into the financial markets. That means bonds. That means stocks. And, you know, this is going to be a big month. We already started off big with that 98 billion flow, leading flow on yesterday. We got the quarterly interest payment coming up around the 15th of August. So August is going to be a big month. September's another story. I mean, I've been, you know, warning about this. That's mid-September. We have a quarterly corporate tax payment that's going to hit, and that's going to be a pretty big drain, and we get wobbly. I mean, seasonally anyway, you know, and these things do create these seasonal trading patterns. You know, sell in May and walk away, that old Wall Street saying. Why is that? Because everything gets drained out with the April tax collections, and then it takes time for that money to get spent back out again into the economy, which creates the summer rally. Which we're in right now. And then we get hit in September, and so September and October are typically weak for stocks because, again, you get that September tax drain that flows into October. Plus you get end of the year tax selling, this sort of stuff. But right now, we're in the bullish mode. Things are going to be okay in spite of these 2 days down. I was actually buying some stock today. I added to my portfolio on this dip. That's the thing you want to do. I mean, you want to place orders below the market. In other words, if you have your favorite stocks and you see, you know, recent lows, let's say, you know, some stock traded at a low of 49 or something recently, and the market's pulling back, you want to put an order at 48 or 47 underneath the recent low where it bounced up from. And just put that out there, you know, and just sit back, and if you get filled, that's great. If you don't get filled, you know, put these orders in as good to cancel, good until canceled, so they stay active, and that automatically gets you in on these pullbacks. You want to be buying when the market pulls back, especially now because we're in a bullish mode, and we're going to go back up. So these corrections you want to buy. It's a little bit different than the big correction we had from January until, you know, June, I guess, when we were in kind of a negative scenario with the drain, with all that fiscal drain. But right now you want to be buying the pullbacks. What else is going on? Dollar was up today. I've been watching the yen. The yen is a bellwether for the general trend of the dollar. As you probably know, the yen has been really, really weak. The dollar has been very strong. But over the last 2 weeks, the yen has picked up. But today, we got a pretty sizable pullback in the yen, about 1.5%. In Forex, that's pretty big. So I still think that we could see more upward action in the yen and more downward action in the dollar. But we might have a little bit more to go on the upside for the dollar before that correction resumes. But keep your eye on that yen, because like I said, that is a good leading indicator for Forex trends, okay? Specifically the dollar. That's it pretty much for today. Not a lot to talk about. A lot of headline stuff going on. See what happens tomorrow. Okay, everybody, don't forget, go to my website, pitbulleconomics.com. The link is here. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.